I think people are really worried about what's to come, especially when you look at these higher inflation points that we're seeing, what that means for inflation in the next 6 to 12 months, what that means from the Fed's perspective. But you're right. Companies are still operating against a very strong backdrop. And now you're talking about stocks down really significantly. You've got both the Dow and the S&P in correction territory. You've got the NASDAQ closing in bear market territory yesterday. Is that what you're seeing? You think it's been too much of a discount? You'd say buy?
Yeah, I think we certainly are. The markets don't like uncertainty, and there are two overhangs still. I think the Fed was one overhang, and certainly the crisis in Russia and Ukraine is the second one. We've gotten a little more clarity from the Fed. Jerome Powell did speak out about being more, disciplined in 25 basis point rate hikes, perhaps, and we'll hear from them next week. But this overhang from Russia and Ukraine, I think until that clears, we're really going to see a little bit of hideout and flight to safety asset classes. Of course, we've seen the dollar, gold, treasuries all kind of act as those safe haven plays. But, if our base case comes out to be true and we're at $100, $125 oil, perhaps more production comes online, either through removal of Iranian sanctions or U.S. production increases or even OPEC Plus getting involved, then we are in a scenario that perhaps we are at slower growth but not recessionary levels. Now, if there is a tail risk, it's that we see oil kind of get to 150 to 200 levels and stay there in a sustained way. Then I think we are looking at true demand destruction. Probably still 2023 is when we're looking at the downturn. But that is a tail risk. It's certainly not our base case.
What if oil gets to $125 and stays there, or stays at the levels it's at today for the next year or two to come? Joe was asking about that earlier.
Yeah, I think certainly over time that does erode demand here in the U.S. as well, but probably not to the point where we're looking at negative GDP growth. Of course, if we were at a baseline lower level to begin with, 1.5%, then you are looking at possibilities of really eroding growth here in the U.S. But we are really starting from a baseline of 3.5%. And so that's really why we are a little bit more cushioned from this oil shock. And keep in mind Steve's point earlier as well. As a consuming nation, we've been less dependent on energy and oil over time. We've become more efficient in our uses, more urbanized, et cetera. And so that is a positive as well. But, in the near term, there will be, people feeling it. Low income wage earners will certainly feel it more. But I think we're coming in with a little bit of momentum.